Chapter number 5, Test Your Understanding. Question number 1. During the course of the audit of TK Home Private Limited, a recognized export house engaged in manufacturing of t-shirts under the brand name of TK, CA Tripti is verifying export revenues of the company for the year 22-23. She has verified transactions entered in export house account maintained in accounting software from relevant export invoices. The export sales are being made on payment of IGST, for which a refund is automatically credited in the account of the company after the goods are shipped. On inquiry from internal audit staff regarding the recognition of export revenues, she is told that export sales are recognized for the year on the basis of bill of lading. However, she is not convinced with such a response and feels that the same does not appear to be proper. She finds that three export invoices bearing dates in the month of March 2023, having a value of 75 lakhs, have not been recognized in the export revenue on the ground that bills of lading for these invoices were issued in the month of April 2023. Discuss from what sources she can obtain reliable audit evidence in this regard. How can she challenge management's assertion regarding the completeness of export revenues for the year 22-23? She can obtain reliable audit evidence by going through GST returns filed by the company on GST portal and correlating the same with e-way bills. She can obtain audit evidence about how the company has reflected its export sales in its GST returns and whether export sales pertaining to three invoices having value of 75 lakhs are reflected in such returns. Further, e-way bills generated on the portal would provide evidence that goods have moved out of the company premises. The export revenue should have been booked at the time the goods moved out of the company's premises. The company is claiming an IGST refund. The refund is linked to the monthly sales return. This aspect can also be verified. Bill of lading is only a document issued by the carrier to the shipper of the goods. That goods have been taken on board. She should challenge and counter management's assertion on the above grounds and point out violations of relevant accounting standards and principles. In this way, she can obtain reliable audit evidence, highlighting and digital and other evidence. She can challenge management's assertion regarding the completeness of export revenues and point out that export revenues are understated. Next, test your understanding. Question number 2. CAP has planned observing the physical count of inventory at the plant of the company located in a remote area in the state of Uttarakhand as part of the statutory audit exercise as at close of the year ending 31st March 2023. He has already informed the management of his intention to reach the plant site by evening of 29th March 2023. He plans to inspect inventories and observe the counting process and perform test counts, among other matters. The management has made all necessary arrangements to facilitate the above exercise. However, an agitation in Himalayan hills has started on 28th March 2023 for the promulgation of a strict law relating to conversion of agricultural land for commercial use. Many civil society Many civil society groups are participating in the agitation. NH7 leading to the plant site is blocked by the protesters. The plant is not accessible through any other mode. The blockade is lifted after 1 month when state government announced the formation of a committee to look into protesters' demands. Does the above case highlight to a situation of impracticability of attendance at inventory counting in terms of requirements of SA 501? How should the auditor proceed in above situation? The above situation does not highlight the impracticability of attendance at inventory counting. It only shows that the auditor is unable to attend physical inventory counting due to the unforeseen circumstances arising out of agitation by protesters. It has led to the inaccessibility of the plant site for a month. The blockade is lifted after a month. SA 501 states that if the auditor is unable to attend physical inventory counting due to unforeseen circumstances, the auditor shall make or observe some physical counts on an alternative date and perform audit procedures on intervening transactions. Therefore, the audit should attend to the physical Therefore, the auditor should attend to the physical inventory count after the blockade is lifted and perform audit procedures on intervening transactions. Next, test your understanding question number 3. On reviewing legal expenses account of Z Limited, CS Sunita, auditor of the company, finds that legal fees amounting to 10 lakhs was paid to B. George, a reputed, reputed lawyer during the year 22-23. On inquiry with the management regarding the purpose of such expenditure, evasion reply was received from the management stating that a lot of work is performed by the said lawyer on behalf of the company. However, no specific details were provided. She finds it proper to correspond directly with the lawyer. She obtains the address and mail ID of the lawyer from his professional service bills. She shoots off an inquiry letter asking for the nature and status of the litigation claims against the company on her letterhead. Is her approach proper? Irrespective of the merits of the approach followed by her, what she is trying to achieve is what she achieved by corresponding with a lawyer of the company. SA 501 states that when audit procedures performed indicate that material litigation or claims may exist, the auditor shall seek direct communication with the entity's external legal counsel. The auditor shall do so through a letter of inquiry prepared by the management and sent by the auditor, requesting the entity's external legal counsel to communicate directly with the auditor. Therefore, her approach in communicating with an external lawyer is wrong. She has to make management aware of her intention to communicate directly with the lawyer. The letter of inquiry has to be prepared with the management and sent by her. Her purpose in corresponding with the lawyer of the company is to identify litigation and claims involving the entity which may give rise to risk of material misstatements. It is due to the reason that litigation and claims involving the entity may have a material effect on the financial statements and thus may be required to be disclosed or accounted for in the financial statements. Next, test your understanding question number 4. On going through financial statements and records of TS Limited during the course of a statutory audit, CAT finds that substantial inventories of the company consisting of mast lighting poles remains with Super Industries for certain finishing works. While planning audit procedures, he had planned about seeking confirmation from Super Industries regarding existence and conditions of such mast lightning poles belonging to TS Limited lying with them as on 31st March 2023. However, the premise of Super Industries were raided by DGGA officials, Director General of GST Intelligence, in connection with the busting of a fake billing scam. The proprietor of the firm was arrested in November 2022 and came out on bail in the month of March 2023. The details of the proprietor and his firm were flashed prominently in the local newspapers of the city where company is located. CAT also belongs to the same place. Discuss how he should proceed in the above matter as auditor of TS Limited. SA 501 states that when inventory under the custody and the control of the third party is material to the financial statements, the auditor shall obtain sufficient appropriate audit evidence regarding the existence and condition of that inventory by performing one or both of the following. Request confirmation from the third party as to the quantities and conditions of inventory held on behalf of the entity, perform inspection or other audit procedures appropriate in the circumstances. It further states that where information is obtained that raises doubt about the integrity and objectivity of the third party, the auditor may consider it appropriate to perform other audit procedures instead of or in addition to confirmation with the third party. Examples of other audit procedures includes attending or arranging for another auditor to attend the third party's physical counting of inventory if practicable, obtaining another auditor's report or service auditor's report on the adequacy of the third party's internal control for ensuring that inventory is properly counted and adequately safeguarded, inspecting documentation regarding inventories held by the third parties. In the given case, the integrity of the third party appears to be doubtful in the view of TGGI rights and his possible involvement in a fake billing scam. He has already been behind bars. Keeping in view above, besides above obtaining confirmation from such party, he may attend a third party's physical counting or ask some other auditor to attend physical counting as on reporting date, depending upon the practical considerations. He can also inspect the records of the goods sent and received back from such party by tracing it to challans, e-bills, etc., and correlate the above information. Next, test your understanding question number 5. As auditor of G Limited, you have sent positive confirmation request to 30 creditors of the company in March 2023. All the creditors in informal sector are small concerns. You choose to send positive confirmation requests to all the above parties at their business address stated on the respective bills after discussing the matter with the CFO of the company. The CFO is cooperative and does not raise any hassles in the matter. Responses to confirmation request are received within a week's time. Your articled clerk informed you that out of the above 30 creditors, GST registrations of 25 concerns have been cancelled during the financial year 22-23 itself by collating information from GST portal. He further informs you that there are no fresh registrations pertaining to PANs of this parties. How would you proceed to deal with the situation as auditor of the company? SA 505 states that if the auditor determines that a response to a confirmation request is not reliable, the auditor shall evaluate the implications on the assessment of the relevant risks of material misstatements, including the risk of fraud, and on the related nature, timing, and extent of other audit procedures. In the instant case, GST registrations of 25 concerns have been cancelled in the year 22-23. It indicates that businesses on those addresses were closed. Further, there are no fresh registrations pertaining to the PANs of these parties. However, the auditors sent external confirmation requests in March 2023, which were duly responded. It raises questions on the reliability of the responses received. SA 500 indicates that even when audit evidence is obtained from sources external to the entity, circumstances may exist that affect its reliability. All responses carry some risk of interception, alteration, or fraud. Such risk exists regardless of whether a response is obtained in paper form or by electronic or by other medium. Factors that may indicate doubts about the reliability of the response includes was received by the auditor indirectly or appeared not to come from the originally intended confirming party. Keeping in view the circumstances described in the case situation, there is a risk that the response has not come from the originally intended confirming party. Unreliable responses may indicate a fraud risk factor that requires evaluation. Next, test your understanding question number 6. CA M. Hussain is appointed auditor of a firm for the year 22-23 on 31st July 2022. The accounts of the firm were unaudited in the year 21-22. The firm had inventories. The firm had material inventories reflected in its financial statements even as on close of the 31st March 2022. He is performing audit procedures, including attending physical inventory count as on 31st March 2023. However, there is a lingering doubt in his mind regarding opening inventories reflected in the financial statements. Does there exist any responsibility on his part in such a situation? SF Item states that in conducting an initial audit engagement, one of the objectives of the auditor with respect to opening balances is to obtain sufficient appropriate audit evidence about whether opening balances contains misstatements that materially affects the current period's financial statements. The auditor has to evaluate whether audit procedures performed in the current period provide evidence relevant to the opening balances or specific audit procedures are required to be performed to obtain evidence regarding opening balances. In case of inventories, however, the current period's audit procedures on the closing inventory balance provides little audit evidence regarding inventory on hand at the beginning of the period. Therefore, additional audit procedures may be necessary, and one or more of the following may provide sufficient appropriate audit evidence. Observing a current physical inventory count and reconciling it to the opening inventory quantities, performing audit procedures on the valuation of the opening inventory items, performing audit procedures on gross profit and cutoff. Test your understanding question number 7. CAR has drawn some samples during the course of audit of a manufacturing company for testing controls as well as the test of details. On the basis of the samples selected, he reaches an erroneous conclusion that access controls on applications are less effective. Further, on the basis of samples selected, he concludes erroneously that work in progress inventories amounting to 5 crores in the financial statements are materially misstated. Outlining the above risks involved, discuss how it is going to affect his audit of the company. The described risk is sampling risk. Sampling risk is a risk that the auditor's conclusion based on a sample may be different from the conclusion if the entire population were subjected to same audit procedure. In the given case, the auditor has arrived at erroneous conclusions on the basis of the sample selected. In the case of a test of controls, he has concluded that access controls are less effective than they actually are. In the case of test of details, he has concluded erroneously that a material misstatement exists when in fact it doesn't. This type of erroneous conclusion affects audit efficiency as it would usually lead to additional work to establish that initial conclusions were incorrect. Next, test your understanding question number 8. Living Well Private Limited is engaged in manufacturing and export of floor coverings. Such products are labor intensive and do not require much of the capital investment in the machinery. The company has no plans to diversify in other product lines. Its directors are also holding significant interest in another company, My Living Private Limited, engaged in manufacturing of blankets using capital intensive machinery. During the course of the audit of My Living Private Limited, it was noticed by you that the company has sold machinery of 1 crore to Living Well Private Limited during the year. The transaction has been done at a normal market rates applicable to such user machinery. How do you view the above transaction as auditor of My Living Private Limited? In respect of significantly related party transactions outside the normal course of business of an entity, it is the responsibility of the auditor, in accordance with SA 550, to evaluate the business rationale or lack thereof of transactions that may have been entered to indulge in fraudulent financial reporting or concealing misappropriation of assets. The auditor has to seek to understand the business rationale of such a transaction from a related party's perspective. It would help him it would help him understand the economic reality of such a transaction and why it was carried out. In the given situation, there is no primary rationale for such a transaction. Living Well Private Limited does not manufacture blankets, and the purchase of part of old machinery pertaining to blanket manufacturing has no rationale for its primarily. for it primarily. A business rationale from the related party's perspective that appears inconsistent with the nature of its business may represent a fraud risk factor. Case study number one. Honest Specialty Chemicals Private Limited is a 1,000 crore turnover company having plants in KMA for manufacturing various products for fertilizer units, cosmetics, and paint industry, etc. The company has built up a good reputation, and apart from the domestic market, it exports to the European markets and the Middle East. The company is a closely held company owned by three friends and three family members. The type of materials handled and produced are hazardous. The following further latest information relating to the company is as under. The company needs to import the key raw materials and is exposed to high risk of price fluctuations and currency risks. The company carries high inventory due to the long import cycle and seasonal sales pattern. The working capital is almost 60% blocked in the inventory and the rest is receivables. Rest in receivables. The company has huge investments in plant and machinery financed through term loans from financial institutions. Since the company has large imports, it buys import licenses from the open market. The company has received customs notice about using fake licenses for importing materials without paying duty. The company has filed an appeal against the said notice and the same is pending with the appellate tribunal. The amount involved is material and along with interest and penalty could be more than 10% of the turnover. The company has liquid chemicals stored in huge tanks. The powdered form of chemicals is stored in standard sized drums. Few items of stocks like coal, sulfur are lying in the open area. The company has huge domestic sales on a consignment basis, and vast quantities of finished inventories are lying with the consignees across India. The company has received an order from NGT to pay a fine of 1.5 crores for the emission of toxic chemicals in the air and water. The company has filed an appeal against the said order. The type of plant is such that it has to be a continuous process and at any time huge quantities of materials are in process. Raw materials are stored in huge tanks located 2 kilometers from the plant, and to transport the chemicals liquid, there is a network of pipes connecting them, and at any point in time, there are huge quantities of materials lying in the pipeline. The company has prepared its inventory details by involving a management expert. During the year, the previous auditor resigned and new auditor got appointed. Theoretical questions based on the case study. Please advise the auditor on the important aspects of carrying out the audit procedures to obtain sufficient appropriate audit evidence in respect of the following. Which audit procedures are required for verifying existence and condition of a company's inventories with a specific reference to its nature of operations? The auditor needs to obtain sufficient appropriate audit evidence regarding existence and condition of inventory. For the above, the auditor needs to do all the following: attendance at physical inventory counting to evaluate management instructions and procedures for recording and controlling the results of the entity's physical inventory counting, like existence of appropriate control activities, collection of used physical inventory count records, accounting for unused physical inventory count records, count and recount procedures, the accurate identification of the stage of completion of work in progress, of slow moving, obsolete, or damaged items, and of inventory lying in tanks, in pipes, and in open areas. The procedures used to estimate physical quantities for liquid chemicals lying in process, tanks, pipelines in open areas like coal pipe, sulfur pipe, etc. Control over the movement of the inventory between areas and the shipping and receipt of the inventory before and after the cutoff. Observe the performance of management's count procedure by observing the control over the movement of the inventory before, during, and after the count to determine adequacy and effectiveness of the count procedure. Inspect the inventory to assist in identifying obsolete, damaged, or aging of inventory. Perform the test counts to obtain the sufficient appropriate audit evidence by tracing items selected from the physical inventory to management's count records. By obtaining copies of management's completed physical inventory count records, cross matching the inventory final inventory records with the actual inventory count results. Next, question number 2. The company has prepared inventory details by involving a management expert, elaborating upon its rationale, discuss responsibilities of the auditor in regard to information prepared by the company involving such an expert. The company deals with specialty chemicals which are in liquid condition, powdered condition, lying in the huge tanks, or in plants under process, lying in pipelines, or lying in open areas like coal and sulfur. The units of measurement for each of the above categories may be different and could involve technical and mathematical principles involving technical and scientific expertise. Keeping this matter in view, inventory details have been prepared by involving management expert. When information to be used as audit evidence has been prepared using the work of a management expert, the auditor shall, having regard to the significance of the expert's work for the auditor's purposes, evaluate the competence, capabilities, and objectivity of that expert, obtain an understanding of the work of that expert, and evaluate the appropriateness of that expert's work as audit evidence for the relevant assertion. Next, question number 3. What additional procedures does the auditor need to carry out in respect of the stocks lying with consignees all over the country? Apart from obtaining confirmation from the third party as to the quantities and the condition of the inventories held on behalf of the entity, the auditor may perform the following other audit procedures: attending or arranging for another auditor to attend the third party's physical counting of inventory, obtaining another auditor's report or a service auditor's report on the adequacy of the third party's internal control for ensuring that inventory is properly counted and adequately safeguarded, inspecting documentation regarding inventory held by third party. Next, question number 4. What procedures should the auditor needs to undertake for litigation matters? Procedure for litigation matters. The auditor shall design and perform audit procedures in order to identify litigation and claims involving the entity by inquiry of management and, where applicable, others within the entity involving including in-house legal counsel, reviewing minutes of meetings of those charged with governance and correspondence between the entity and its external legal counsel, reviewing legal expense account, the legal claims involving customs and fine of NGT are material. In such circumstances, if auditor assess risk of material misstatements regarding litigation, he can seek specifying inquiry, letter of specific inquiry from the external legal counsel, including a list of litigation and claims, where applicable, management's assessment of the outcome of each of the identified litigation and claims and its estimate of the financial implications, including cost involved, and a request that the entity's external legal counsel confirm that reasonableness of the management assessments and to provide the auditor with further information. If the list is considered incomplete or incorrect, the auditor may seek meeting with the external legal counsel if the matter is having significant risk, it is complex, or there is disagreement between the management assertion and the legal counsel's views. Obtaining a written representation from the management and, where appropriate, those charged with governance, that all the known actual or possible litigation and claims whose effects should be considered when preparing the financial statements have been disclosed to the auditor and appropriately accounted for and disclosed in accordance with the applicable financial reporting framework. Next, MCQs. The objective of the management expert is likely to be lesser if first one, expert is competent, expert is capable, expert has a relevant experience, expert is employed by the entity. Answer is the expert is employed by the entity. Which of the following matters? is irrelevant for auditor in planning attendance of physical inventory counts. Nature of inventory, timing of physical inventory counting, the nature of internal control related to inventory, whether 100% of the inventory is covered in the count. Answer is whether 100% of the inventory is covered in the count. External confirmation for receivables are not reliable in the in which of the following situations. External confirmations for receivables are not reliable in which of the following situations. The response directly received by the auditor. The confirmation has come from the address of the confirming party. The confirmation is signed by the plant manager. The confirmation is positive confirmation. Answer C is correct. The confirmation is signed by the plant manager. The new auditor planned certain procedures with respect to opening balances. Which of the following procedures is not in accordance with SA 510? First one, reading the most recent financial statements and audit report. Second, whether the prior period report is modified, the impact on the current period. Third, correctly bringing forward of prior period closing balances. Fourth, ascertaining whether predecessor auditor had attended physical inventory count. Answer is D, ascertaining whether predecessor auditor had attended physical inventory count is not in accordance with SA 510. Case study number 2. Trustworthy Real Estate Private Limited Company is with Mr. B as MD along with his wife Maya owned the company. The company had floated one SPV, special purpose vehicle, Real Trust Developers Private Limited, in which a foreign entity became a joint venture partner with a 50% stake. The venture was formed with its head office in Mumbai to invest in SRA projects, some slum rehabilitation authority, and develop them into commercial units of sale. Mr. B was going through a rough patch in his life. He was in financial difficulty and had mounting dues and huge outstanding exposure to banks and suppliers in his companies. Mrs. Maya was from a very wealthy family and had fallen in love with Mr. B, who was from a middle class family. Mrs. Maya had an expensive lifestyle and was always short of funds to maintain her lifestyle. Mr. B sensed a golden opportunity in the new venture because the foreign partner had no knowledge of the Indian regulations and how the SRA projects worked and was solely dependent on the local partner to get all the permissions, scouting for the projects, getting consents from the slum dwellers for the projects, giving contracts for the construction of projects, and such matters. Mrs. ABC and Company Chartered Accountants were appointed as the auditor of a joint venture, and the engagement team was headed by CA Skeptic, who had, in his instinct with the firm, in his stint with the firm, was instrumental in unearthing two major frauds and had the ability to sniff out any such scenarios. Mr. B has a dominant personality and a powerful influence on functioning, and everybody looks to him for guidance. The governance structure was very poor in the organization, and Mr. B used it to dictate the decisions. Even though, as part of the joint venture, even though as part of the joint venture, there was a detailed governance structure and policies and procedures in place for the decision making process at the joint venture. However, the representative on the board of the joint venture of the foreign partner who had shifted to India to supervise the SRA project had grown friendly with Mr. B and Mr. B had even gone out of the way to help him get good accommodation and second-hand Mercedes. Often they both go to a club in the evening for a drink. The dealings in the SRA project are not very transparent and above board, but are very opaque. Given the above situation, CS Skeptic wants to discuss with the audit team areas and situations where risk of material misstatement is possible and there are chances of having an undisclosed related party relationship to misappropriate the funds. First theoretical question. Please guide the engagement team on the further course of action as per SA 550. The engagement team shall include specific considerations of the susceptibility of financial statements to material misstatement due to fraud or error that could result from the entity's related party relationships and transactions. The nature and extent of the entity's relationships and transactions with related parties are identified independently by the auditor by verification of MBP1 data and data available on MC website relating to directors and companies, etc. An emphasis on the importance of maintaining professional skepticism throughout the audit regarding the potential for material misstatements associated with related party relationships and transactions. The circumstances or conditions of the entity that may indicate the existence of related party relationships or transactions that management has not identified or disclosed it to the auditor. Example, a complex organizational structure, use of specific purpose entities, off balance sheet transactions, or an inadequate information system. The records are documents that may indicate the existence of related party relationships or transactions. The importance of management and those charged with governance attached to the identification, appropriate accounting for, and disclosure of related party relationships and transactions. If the applicable financial reporting framework establishes related party requirement and the related risk of management override of relevant controls. In addition, the discussion in the context of fraud may include specific consideration of how related parties may be involved in the fraud. For example, how specific purpose entities controlled by the management might be used to facilitate earnings management, how transaction between the entity and the known business partner of a key member of management could be arranged to facilitate misappropriation of entities' assets, an exchange of ideas among engagement team members about how and where they believe the entity's financial statements may be susceptible to material misstatements due to fraud, how management could perpetrate and conceal fraudulent financial reporting, and how assets of the entity could be misappropriated. A consideration of circumstances that might be indicative of earnings management and the practices that might be followed by the management to manage earnings that could lead to fraudulent financial reporting. A consideration of the known external and internal factors affecting the entity that may create an incentive or pressure for management or others to commit fraud, provide the opportunity for fraud to be perpetrated, and indicate a culture or environment that enables management or others to rationalize committing fraud. A consideration of management's involvement in overseeing employees with access to cash or other assets susceptible to misappropriation. Susceptible to misappropriation. A consideration of an unusual or unexplained changes in behavior or lifestyle of the management or employees which have come to attention of the engagement team. An emphasis on the importance of maintaining a proper state of mind throughout the audit regarding the potential for material misstatements due to fraud. A consideration of the type of circumstances that, if encountered, might indicate the possibility of fraud. A consideration of how an element of unpredictability will be incorporated into the nature, timing, and extent of the audit procedures to be performed. A consideration of the audit procedures that might be selected to respond to the susceptibility of entities' financial statements to material misstatements due to fraud and whether certain types of audit procedures are more effective than others. A consideration of any allegations of fraud that have come to the auditor's attention. A consideration of the risk of management override of controls. Next, question number 2. What are fraud risk factors in the given case? Fraud risk factors. The fraud risk factors are the events or the conditions that indicate an incentive or pressure to commit fraud or provide an opportunity to commit fraud. The fraud risk factors are classified based on three conditions that are generally present when fraud exists: an incentive or pressure to commit fraud, a perceived opportunity to commit fraud, an ability to rationalize the fraudulent action. In the given case scenario, following fraud risk factors can be segregated in the two conditions of the incentive or pressure to commit fraud in a perceived opportunity to commit fraud, an incentive or pressure to commit fraud, financial difficulty with huge outstanding dues towards vendors and financial institutions, expensive lifestyle, a requirement to fund 5 crores as equity contribution in the special purpose vehicle, a perceived opportunity to commit fraud, dependency of the foreign partner and no knowledge of the foreign partner of local laws and the SRA business model in India. The risk is due to the way real estate industry functions and particularly the risk due to the SRA business model. Dominant personality of MD, which can lead to the management override of controls for undisclosed business relationship with Mrs. Useless and Sons Private Limited. Next, question number three. Question number three. Given the situation that each partner in the joint venture has to bring into the entity a contribution of 5 crores each, and given the situation that Mr. B had appointed one agency, the name Useless and Sons Private Limited, to get consent from the slum dwellers, for which the agency was paid 20 crores as kitty to get the job done. CA Skeptic inclines that there is some connection between 20 crores paid and simultaneously within a short span the infusion of 5 crores as equity contribution by Mr. B. Please guide CA Skeptic in establishing this link based on the guidance available in SA 550 and SA 240. What additional audit procedures does his team need to be undertaken for the conclusion? If the auditor identifies arrangements or information that suggest the existence of related party relationships or transactions that management has not previously identified or disclosed to the auditors, the auditor shall determine whether the underlying circumstances confirm the existence of those relationships or transactions. In such situations, the auditor shall promptly communicate the relevant information to other members of the engagement team in order to assist them in determining whether this information affects the results of and conclusions drawn from risk assessment procedures already performed, including whether the risk of material misstatements need to be reassessed. Where the applicable financial reporting framework establishes related party requirements, request management to identify all transactions with the newly identified related parties for the auditor's further evaluation and inquire as to why the entity's control over related party relationships and transactions failed to enable the identification or disclosure of related party relationships or transactions, perform appropriate substantive audit procedures relating to such newly identified related parties or significant related party transactions, reconsider the risk that other related parties or significant related party transactions may exist that management has not previously identified and disclosed to the auditor, and perform additional audit procedures as necessary. And if the non disclosure by the management appears intentional and therefore indicative of risk of material misstatements due to fraud, evaluate the implications for the audit. In such cases, the requirements and the guidance in SA 240 regarding the auditor's responsibilities relating to fraud in an audit of financial statements are relevant, where management appears to have intentionally failed to disclose the related parties or significant related party transactions to the auditor. The auditor may also consider whether it is necessary to re-evaluate the reliability of the management responses to the auditor's inquiries and management's representations to the auditor. The auditor needs to carry out verification and inspection of the ownership structure and the review of the financial statements of Mrs. Useless and Sons Private Limited through the MCA website and establish the nexus between the two. The auditor needs to carry out an inspection of the data filed by Mr. B for his group companies to establish any past transactions or relationship between two entities. The auditor needs to ask for all the documents for the utilization of 20 crores and can investigate by visiting the parties involved and asking for the confirmation directly. Next, Question number 4. Question number 4. If based on the additional audit procedures undertaken by CS Skeptic, it is established that there is a likelihood of misappropriation of funds and the financial statements as a whole may be materially misstated, how CS Skeptic needs to plan the further course of action. The auditor needs to reassess the reliability of the evidence previously obtained, as there are doubts about the completeness and truthfulness of representations made and about the genuineness of accounting records and documentation. Determine the professional and legal responsibilities applicable in the circumstances, including whether there is the requirement for the auditor to report to the person or persons who made the audit appointment, and in some cases to regulatory authorities. Consider whether it is appropriate to withdraw from the engagement where withdrawal from the engagement is legally permitted. And if the auditor withdraws, discuss with the appropriate level of management and those charged with the governance that the auditor's withdrawal from the engagement and the reasons for the withdrawal, and determine whether there is a professional or legal requirement to report to the person or persons who made the audit appointment, or in some cases to the regulatory authorities, the auditor's withdrawal from the engagement and the reasons for the withdrawals. MCQ question number 1. Which of the following best describes the method that Mr. B can indulge to commit fraud? First one, concealing and not disclosing facts that could affect the amounts regarding the financial statements. Second, engaging in complex transactions that are structured to misrepresent the financial position or financial performance of the entity. Third, causing an entity to pay for goods or services not received. Fourth, using undisclosed business partners to misappropriate funds in the grab of making a business transaction and thus siphoning off the funds. Option D is correct. Using undisclosed business partners to misappropriate funds in the grab of in the garb of in the garb of making a business transaction and thus siphoning off the funds. Second one, in the given scenario, the main factor giving rise to risk of material misstatement is the expensive lifestyle of the owners, appointment of an auditor having experience in unearthing of frauds, the deteriorating financial condition of the owner's business, the vulnerability and dependence of the foreign partner on the local partner. Option D is correct. The vulnerability and dependence of the foreign partner on the local partner. Third one, in the given scenario, which is the most important red flag for auditor? Expensive lifestyle, undisclosed related party relationships to siphon off the funds, financial crunch, the dominant influence of the owners. Option B is correct. Undisclosed related party relationships to siphon off the funds. Next, which of the following is not a fraud risk factor? Dominant influence of the owners, expensive lifestyle, fraud risk due to nature of the industry, floating of new SPV itself. Option D is correct. Floating of new SPV itself is not a fraud risk factor. Integrated case scenario. Black and White Limited is into the business of manufacturing ready-made garments in Amritsar. It procures all the raw material required for its production from Punjab, Himachal Pradesh, and Jammu and Kashmir. Its sales market, its sales market, however, covers almost all the northern parts of the country. CA Anu is the engagement partner of Maheshwari and Co., appointed as the statutory auditor of the company. She calls for a meeting of the engagement team to delegate work and responsibilities. During the audit, the engagement team comes across the following facts. Woolen Private Limited is one of the vendors of the company, from which the company has been purchasing wool for many years on a current account basis, but no single purchase has been made in the last 9 months, and the outstanding balance stands as it is in the books of accounts. CA Anu wants to confirm the balance and requests the CFO of the company for sending a balance confirmation request to Woolen Private Limited, to which he refuses and is not willing. The Fashion Jingo Limited is one of the customers of the company, and hasn't replied to CA Anu's positive balance confirmation request sent. Mr. X, one of the fashion designers, had sold his designs to the company, but owing to a dispute, the contract got cancelled. And now both the parties are under litigation in the court of law, local court of law. The engagement team is guided as to the procedures to be designed and performed to identify this matter. CA Anum simultaneously seek direct communication with the company's external legal counsel, sensing the risk of material misstatements. However, it ends up in vain as the external legal counsel, Mr. C, refused to comment. She is unable to obtain sufficient appropriate audit evidence in this regard through alternative audit procedures either. The team documents all the relevant information with respect to the above facts, and CA Anu issues the audit report accordingly. First MCQ, Fashion Jingo Limited has not responded to CA Anu's request. What should be proper course of action for her in such a situation? First, perform alternate audit procedures. Second, consider it as a negative confirmation. Third, give a qualified opinion. Fourth, should visit the customer's company premises herself and confirm the balance on the spot. Option A is correct. Perform alternative audit procedures. Second, with respect to Advocate C's cold shoulder to CA Anu's request, what she should do: modify her audit report, give an unqualified opinion, give a disclaimer of opinion, withdraw from the engagement. Option A is correct. Modify her audit opinion. Next, what should be CA Anu's first and foremost response in the case of request made relating to balance confirmation from Woolen Private Limited? Perform alternate audit procedures, withdraw from the engagement, communicate with those charged with the governance, telling the effects on his audit opinion, inquiry as to the reasons behind the management's response, and seek audit evidence as to its validity and reasonableness. Option D is correct. Inquire as to the reasons behind the management's response and seek audit evidence as to its validity and reasonableness. Next, which of the following procedures will not be performed by the engagement team as audit procedures while dealing with the case of mistakes? Inquiry of management, inquiry of mistakes, reviewing minutes of meeting, reviewing legal expense account. Option B is correct. Inquiry of mistakes. Next question, test your knowledge. Question number one. C Limited supplies Navy uniforms across the country. The company has three warehouses at different locations throughout the India and five warehouses at the borders. The major stocks are generally supplied from the borders. C Limited appointed Mrs. Opecue and Co. to conduct its audit for the financial year 22-23. Mr. P, partner of Mrs. Opecue and Co., attended all the physical inventory counting conducted throughout the India but could not attend the same at the borders due to some unavoidable reasons. You are required to advise Mrs. Opecue and Co. how sufficient appropriate audit evidence regarding the existence and condition of the inventory may be obtained. How is an auditor supposed to deal with attendance at physical inventory counting is impracticable. Special considerations with regard to inventory. As per SF 501, audit evidence, specific considerations for selected items. When inventory is material to the financial statements, the auditor shall obtain sufficient appropriate audit evidence regarding the existence and the condition of inventory by attendance at physical inventory counting, unless impracticable to evaluate management's instruction and procedures for recording and controlling the results of entities' physical inventory counting, observe the performance of management's count procedures, inspect the inventory, and perform test counts, and performing audit procedures over the entity's final inventory records to determine whether they accurately reflect actual inventory count results. Attendance at physical inventory counting not practicable. In some cases, attendance at physical inventory counting may be impracticable. This may be due to factors such as the nature and the location of the inventory. For example, where inventory is held in a location that may pose threats to the safety of the auditor, the matter of general inconvenience to the auditor. However, in is not sufficient to, however, is not sufficient to support a decision by the auditor that attendance is impracticable. Further, as explained in SC 200, overall objectives of the independent auditor and the conduct of an audit in accordance with standards on auditing, the matters of difficult time or cost involved is not in itself a valid basis for the auditor to omit an audit procedure for which there is no alternative or to be satisfied with audit evidence that is less than persuasive. Further, where attendance is impracticable, alternative audit procedures, for example, inspection of documentation of the subsequent sale of specific inventory items acquired or purchased prior to the physical inventory counting, may provide sufficient appropriate audit evidence about the existence and condition of the inventory. In some cases, though, it may not be possible to obtain sufficient appropriate audit evidence regarding the existence and condition of the inventory by performing alternative audit procedures. In such cases, SS 705 on modifications to the opinion in the independent auditor's report require the auditor to modify the opinion in the auditor's report as a result of the scope limitation. Next, question number 2. Test your knowledge. Question number 2. GHK Associates Chartered Accountants conducting the audit of PBS Limited, a listed company, for the year ended 31st March 2023, is concerned with the presentation and disclosure of segment information included in the company's annual report. GHK Associates wants to ensure that methods adopted by the management for determining segment information have resulted in disclosure in accordance with the applicable financial reporting framework. Guide GHK Associates with examples of matters that may be relevant when obtaining an understanding of the methods used by the management with reference to the relevant standards on auditing. The auditors, GHK Associates, wanted to ensure and obtain sufficient appropriate audit evidence regarding the presentation and disclosure of segment information in accordance with the applicable financial reporting framework by obtaining an understanding of the methods used by the management in determining segment information. SA 501 guides in this regard. As per SA 501, audit evidence, specific consideration for selected items, example of matters that may be relevant when obtaining an understanding of the methods used by the management in determining segment information and whether such methods are likely to result in disclosure in accordance with the applicable financial reporting framework includes sales, transfers, and charges between segments and elimination of inter-segment amounts, comparison with budgets, and other expected results. For example, operating profits as a percentage of sales, the allocation of assets and costs among segments, consistency with prior periods, and the adequacy of the disclosures with respect to inconsistencies. Question number 3. C Limited appoints Chintan and Mani as statutory auditors for the year 22-23. Chintan and Mani seems to have different opinions on audit approach to be adopted for audit of C Limited. Mani is of the opinion that 100% checking is not required and they can rely on audit sampling techniques in order to provide them a reasonable basis on which they can draw conclusions about the entire population. Chintan is concerned that whether the use of audit sampling has provided a reasonable basis for conclusions about the population that has been tested. You are required to guide Chintan about his role if audit sampling has not provided a reasonable basis for conclusions about the population that has been tested in accordance with SF 530. As per SF 530 audit sampling, the auditor shall evaluate the results of the sample and whether the use of audit sampling has provided a reasonable basis for conclusions about the population that has been tested. If the auditor concludes that audit sampling has not provided a reasonable basis for conclusions about the population that has been tested, the auditor may request management to investigate misstatements that have been identified and the potential for the further misstatements and to make any necessary adjustments and or tailor the nature, timing, and extent of those further audit procedures to best achieve the required assurance. For example, In the case of test of controls, the auditor might extend the sample size, test an alternative control, or modify related substantive procedures. Next, question number 4. Test your knowledge. Question number 4. During the audit of Star Limited, a company engaged in the production of paper, the auditor received certain confirmation for the balance of trade payables outstanding in the balance sheet through external confirmation by negative confirmation request. In the list of trade payables, there are a number of small balances except one, which is an old outstanding of 20 lakhs for which no confirmation was received. Comment with respect to standards on auditing relating to the confirmation process and how to deal the non-receipt of confirmation. External confirmation. As per SF 505, external confirmation. Negative confirmation is a request that the confirming party respond directly to the auditor only if the confirming party disagrees with the information provided in the request. Negative confirmations provide less persuasive audit evidence than positive confirmations. The failure to receive a response to a negative confirmation request does not explicitly indicate receipt by the indicated intended confirming party of the confirmation request or verifying of the accuracy of the information contained in the request. Accordingly, a failure of a confirming party to respond to a negative confirmation request provides significantly less persuasive audit evidence than does a response to a positive confirmation request. Confirming party also may be more likely to respond, indicating their disagreement with a confirmation request when the information in the request is not in their favor and less likely to respond otherwise. In the instant case, the auditors send the negative confirmation request. The trade payables having outstanding balances in the balance sheet while doing audit of Star Limited. One of the old outstanding of 20 lakhs has not sent the confirmation on the credit balance. In case of non-response, the auditor may examine subsequent cash disbursements or correspondence from third parties and other records such as goods received notes. Further, non-response for negative confirmation request does not mean that there is some mismanagement, as negative confirmation request itself is to respond to the auditor only if the confirming party disagrees with the information provided in the request.